Thank you everyone for attending this hybrid meeting for the Governance Committee on Wednesday the 16th of September 2020. We have some members present in the Lancastrian suite, some joining from home, and members of the public are welcome to observe from Committee Room 1 where the meeting is being streamed. For those of you who don't know me, my name is Deborah Platt. I'm a councillor for Exton on Chorley Borough, and I'm the chair of this committee. Councillor Anthony G is the vice chair. Do you want to say hello?
Hello,
Tony?
everybody.
Hello.
Hello, everybody.
So if you want to note that this meeting is being run on Microsoft Teams, but it's also being recorded, and the video stream will be uploaded to the YouTube channel following the meeting. For each item, I will invite members to use their raise hand function on the iPad to make any comments to ensure each member has the opportunity to speak and that they are not speaking over each other. When speaking, please reference the paragraph number to enable everyone to follow you. Please mute your microphone and video feed when you are not talking. If the technology fails, then I will adjourn the meeting for a few minutes to try to resolve the issue, or if that's not possible, a new date and time will be organised. Please can I ask all members to confirm that they can hear and speak before the meeting begins, and I'll call out each member. So I've got Mark Clifford.
Present.
Jean Cranshaw. Silence. I'm guessing she must not be here. Gordon France.
Here, Chair.
Yeah. Yvonne Hargreaves.
Apology submitted from Yvonne, thanks.
Oh, okay. Roy Lees.
Yes, here.
Kim Snape.
Here.
Yeah. Myself and Tony. Please also can I welcome Barry Morris from Grant Thornton to his first meeting of the committee. Are you there, Barry?
I'm here. Thank you, Chair.
Okay. Okay, so we've got apologies from Mr. Ripley, the independent member, Councillor Hargreaves, which, yep, we've noted that one, and possibly Jean Cranshaw, which she didn't shout out, so I'm guessing she's not here.
Hi, apologies, Chair, Ruth here. I should also mention Charlotte Fitch, the other independent person, is also on the call.
Right, yeah. Okay, item 1, minutes of the meeting from the 1st of July Governance Committee. Are there any issues to raise on the accuracy of these minutes from anyone? Silence, nice. Can I recommend that the minutes are approved? Does anybody want to propose those?
I can propose those if you like, Chair.
Thank you, Councillor France. And I'm guessing Tony G is trying to unmute himself to second them. Yeah, okay. So I guess we're all in favour of those. And if anybody's against, could you please shout up? No. So we'll take it that the minutes of the meeting are approved. Thanks very much. So item 2, declaration of interest. Members are reminded of their responsibility to declare any pecuniary interest in respect of matters contained on this agenda. As this is a virtual meeting, if a member has a pecuniary interest, they are requested to leave the call completely rather than just mute their microphone. The member can rejoin the call following the completion of the item in question. Item 3, update on statement of accounts. To receive and consider a verbal update from the Chief Financial Officer, but I believe Tony's taking this item.
I am, yes, Chair.
Off you go.
Thank you. Well, the first point is the obvious one. The 31st of August deadline has now passed, and no, we didn't at that date have a draft statement of accounts, and no, at this stage we still don't. Now, clearly that's disappointing, but I don't think it will be a surprise to anyone, because this really is a continuation of the previous updates, and those updates have highlighted a significant risk of the deadline being missed, and we have now reached the point where that which we were concerned might happen has happened. And yes, that is the issue of the property valuations. We do now have most of the valuations in terms of simply the number of individual valuations. We have the vast majority of them. But predictably, those that are left are the more troublesome, and predictably have actually quite a large value attached to them. So those valuations aren't yet complete, and we quite simply cannot publish a draft statement without them. It's frustrating. For me, it's frustrating on two levels. One is the obvious one, that it's just simply not where we would wish to be. And the second is the angle that, as members will be aware, once we have fed all the transactions for property valuations into the accounts, we do another thing in the accounts where we actually effectively reverse the transactions out. And so we finish up with the same bottom line as we started with. Nevertheless, it's a major part of what we are required to do. Now, everything else is in place, ready to complete the statement. The document itself still requires a fair amount of work because although there are some parts of it that can be completed ahead of the valuations and which have been completed, there are extensive parts of the document itself which we would effectively be completing them once, only to have to go back and do them again once the valuation numbers were complete. Now, on progress with the valuations themselves, I'm glad to be addressing this afternoon rather than this time yesterday. I'm going to hesitate to say I'm cheerful and upbeat about it all, but certainly more in that direction than I was yesterday. We have had quite a long virtual meeting with the valuers yesterday, and we've made fairly significant progress in that. So within the next fortnight, perhaps, and please don't ask me to absolutely commit to the next fortnight, but there is a good possibility that we will have them complete within the next fortnight. Now, after that, realistically, we probably have to allow another fortnight to get the document to exactly where it needs to be, ready to go onto the website. So realistically, that is taking us towards mid-October. That would mean the statement would be ready for completion well in advance of the next meeting of this committee. So this is where we come to the question of the role that members will play ahead of it actually going onto the website. Now, as I think you will already be aware, there is no formal statutory requirement for members to approve the draft statement. Absolutely there is for the final statement, but not for the draft, which simply requires Chief Financial Officer signature. We do have, I believe, a slight precedent last year where the statement was on the website at the 31st of May and members reviewed it, I think, in the first few days of June, but clearly 2 or 3 days is not so wide a gap as there is likely to be between the completion of the document and the committee's next meeting in November. So I think perhaps colleagues might express a view on how we actually make arrangements around that. Thank you, Chair.
Thank you, Tony. Has anybody got any questions or queries? No. I think someone's going to speak. Right, Councillor G. Sorry, it just says Councillor A.
Can you hear me? I can't get off
now.
Yeah, you can
now.
Obviously, we're in the middle of a pandemic and these things do happen. It's got to be signed off. I wonder whether the committee would, if yourself and me kind of look at them and sign them off on behalf of the committee.
Tony?
in these circumstances.
Yeah, I was going to suggest that you'd mentioned that to me, and that it may be a good idea to keep the chair and the vice chair informed, and to have the opportunity to review the accounts before they're signed off. That would have to be a proposal. So if I can possibly put that forward, or Tony put that forward as a proposal, if the committee's interested in accepting that. Tony, do you want to second that?
I will second that, yeah.
Yeah, okay. Councillor France?
I was only going to say that I would second it if it was needed.
Okay. So if there's no questions, and that we've got that proposal on the table, I'm accepting. I'm presuming it's okay. But if anybody wants to shout up if they want to object. No? Okay. So if it's okay that the report is noted, but also that the chair and the vice chair are kept informed, so we can see the report before it's signed off by the Chief Finance Officer. Okay. So if we can move on to number 4.4, Treasury Management Annual Report 1920, Q1, Monitoring 2021, pages 11 to 42, and it's Tony again.
Thank you, Chair. Well, this report, for the most part, is very much along the lines that members will probably expect to see. 2019-20, if we just refer to, if we go to paragraph 11, which is on page 12 onwards, really from there, paragraph 11, the following paragraphs, we have there the details of the numbers around the capital programme for last year and the associated borrowing and the major asset purchase in there. So yes, those are, there are some quite chunky numbers in there, but I would think really nothing that will surprise anyone. So tables 1 to 4, yep, the succession of numbers in there, running the way through to page 15. Really just, again, seeing that capital expenditure and its outworking in terms of the additional borrowing and the overall portfolio position. The major background event is in paragraph 15 on page 17, and a little way down in there, if we actually go on to page, oh, sorry, I've lost my own place. No, right at the top of paragraph 15. Yes, the major underlying events is the fairly drastic drop in base rates in late March of 2020 with the onset of the pandemic. Things hadn't been going quite as originally forecast up to that point, because actually a rise in base rates had originally been expected in September of last year. Subsequently, that was expected to be later in the year. Ultimately, it hadn't happened by March, at which point other events very rapidly took over. The one figure that is perhaps not quite as usual is in paragraph, let's see, it's table 6, it's in on page 16, where we have the year-end position. And just looking at the investment figure at the bottom there, 8.761 million, that is a little higher than would normally be the case. It's probably roughly approximately twice what it would usually be. And again, this is related to the onset of the pandemic, as the council has been preparing its response, ready to pay out substantial sums in grants to support local businesses, and the timing of the government support to cover those, there was just a slight mismatch or a potential mismatch behind the timings, and so we did enter into some additional temporary borrowing in order to make sure we were absolutely definitely covered for that. And that actually, even with that temporary borrowing, the council remained within the prudential indicators, the authorised limit wasn't in the operational boundary. We stayed within those numbers. And really at table 6, I would just like to cross-refer to page 21 and appendix B. And there's a slightly higher number on there, 8.933 million, which is the 8.671 with a few extra bits in. So I wanted to draw the link across to that table just to relate back to the previous item on the final accounts, and just to show a tangible sign that the statement is well on its way in every respect except the valuations. That figure there of 8.933 million is a number that you will see on the face of the council's balance sheet for cash and cash equivalents. The other thing to highlight is page 18 and table 8, the one that will always be highlighted. How have we actually done with our investments? Well, yes, I have to say it's not at all easy to get terribly excited about 0.64%. But nevertheless, the target very reasonably set was 0.61%. So we have done better than that. So while it's not an enormous number, it's not a bad number at all. And then really, when it comes to activity in the first quarter of 2021, there's really nothing specific to highlight. Clearly, investment returns have taken a nosedive. It is very, very unlikely we're going to come remotely close to 0.64% across this coming year. But otherwise, things have been operating probably about as close to normal as anything is in current circumstances. The pattern of the underlying cash flows is a little bit different to how we would normally expect it, but other than that, things are progressing, and yeah, activity is proceeding relatively normally. So I'm happy to take any questions on the report, Chair.
Thank you, Tony. Has anybody got any questions on that report? I've got no hands up. No? Okay. So if we're at the end of discussing that item, please can we note that report? Is that okay with everybody?
I would second that proposal.
Thank you. If there's no dissent, we'll move on. Item 5, external audit plan, pages 43 to 62. We're moving over to Barry now. Barry, are you there? Hi.
Thank you, Chair. I'm here. So, Chair, just to set out why I'm here instead of Mark. So, I'm sure you've already been told, but Mark is away from work at the moment, and we don't anticipate that Mark will be back in time for the completion of the audit. So we put in place cover so that I'm now your engagement lead for the rest of the 2019-20 year, and I'll be working with Simon Hardman, who's also at the committee and will be helping me present this report. Okay. Just a little bit of background about me. So I'm based in the Bristol office. I've been working with the firm for 23 years now, so I've got a little bit of experience of local government audits. So hopefully I know what I'm doing, and if members have got any questions, then obviously I will seek to answer those. Chair, the audit plan is set out in front of you today. I would just reflect on the contribution that Tony just made around the timing for the delivery of the audit, which is obviously dependent on us getting the draft statement of accounts. We would have commenced the audit already, but what we've been able to do is move our resources around so that we'll work on another clients until those accounts are available. So we'll continue to work with your finance team to let you know when that audit will be able to commence. But members, I will put on record now, I guess, that there is a possibility that we won't be able to meet the 30th of November deadline, or the publication deadline, because we don't know what we're going to find when we get the accounts through. But obviously what we will do is we will continue to work with your finance team and keep members updated as to the findings of our audit work. As Tony said, one of the key risk areas that we'll obviously come on to is the valuation of property, plant and equipment. So if that's the one that you're still waiting for, that'll clearly be an area of focus for us. So Chair, if I can go on to page 45 of the report then, which just sets out the introduction and headlines for the audit. So we've identified there the significant risk in relation to the audit as required under the international auditing standards. So you'll see that we've got 5 particular risks there: management override of controls, the valuation of land and buildings, and also the valuation of the net pension fund liability. We've also identified the accounting for the purchase of Logistics House as a significant risk, and that will flow through both our accounting work and also the value for money work that Simon's undertaking at the moment, and also the COVID-19 pandemic. So again, that will cover things like how officers have worked remotely and also the impact upon the valuations. So one of the things, for example, that we would be expecting there is that there would be a material valuation uncertainty in relation to land and buildings as a result of the COVID-19 pandemic. And again, that's sort of been indicated by the RICS guidance. And the reason for that is because the pandemic hit just before the end of the financial year, we don't really know whether the fair value of those assets will be appropriate, because we just don't know. We don't know what the market's done as a result of that. So again, without prejudging the outcome of our audit work, we would expect there to be a valuation uncertainty there. In terms of your materiality, we've set materiality at just over £1 million there, which equates to 1.9% of your prior year gross expenditure, which is the latest information that we have available. If necessary, we'll update that at the time of the audit to reflect the final position. But we also set a level of clearly trivial as well. So we will only report to you matters that are over £52,000. That's a slightly lower figure than the prior year, and again, materiality has just come down a little bit just to reflect the increased risk around some of the accounting there, but it's not a significant movement from last year. As I said, the value for money arrangements, then we'll be looking at financial sustainability, which is consistent across all local government bodies, and that purchase of Logistic House as well. I can confirm that all of the audit team have confirmed their independence, as have I. And Chair, with your permission, I'd just like to hand over to Simon, who will talk you through a little bit more of the detail.
Absolutely. Simon, are you there?
I am. Can everybody see me and hear me? So I'm not really sure actually how much more I've got to say, really, because I think Barry's covered it very well in just that one slide. But I think what I'll just do is I'll just briefly go through each page, because I know you only got the report, I think, earlier this week. So after that first page, there's section 2, which is the key matters impacting on our audit. And basically, I don't think you'd be particularly surprised about those issues that we've identified there. The generic one around about the wider economy and obviously the political uncertainty around COVID and also Brexit is causing uncertainty across the sector. Issues for us, our regulator, the FRC, is now sort of keep on raising the bar in relation to the audit quality. So I think it's fair to say we've always felt that we have delivered a good audit for Chorley, but I think that bar is getting higher and higher. The third item was just the one local issue, and it is in relation to that purchase of sort of Logistics House, or TVS, or the big warehouse as it was being called at the time, and basically the creation of the new wholly owned subsidiary. And I think the reason why we've seen this as a particular issue is for the main reason being is the size of the transaction. In totality, the spend is in excess of 33 million, so it's a massive item for your capital programme. And also that level of resource means that the council has taken on some risk. And we're not saying there's anything wrong with taking on that risk as long as it was properly sort of planned. And I think that's the key thing for us, is that we just need to make sure that you as members received all the information that you should have done to make that informed decision, and also just to make sure that basically there was proper plans behind it. So that works will be progressing. But the other part of it as well is just that accounting side. And I know in the short term and the subsidiary is probably lying there fairly dormant at the moment. But going forward, obviously there'll be the intention for that subsidiary to be part of that accounting for that particular property. So it's basically a really we see it as a really key issue for the council during 1920. So if we move over then to I'll just quickly run through the significant risks. The first one we actually report, which is the revenue cycle includes fraudulent transactions. So basically we have to, there's a presumption that revenue may be misstated due to improper recognition. However, we can rebut it. And we often do within local authorities because of the nature of the income that you received. And there being little incentive to manipulate that recognition. So we move on to the next slide, which is the management override significant risk. And this is a risk that you'll find in all of our audits and all audits, in that it's a non-rebuttable presumed risk that no matter how good your internal control may be, that there's always that risk of management override. And we have to do some testing around that, specifically normally around things like journals. You've heard Barry mention around about the significant risks identified in relation to the evaluation of PPE, and obviously Tony has filled on in relation to that. And I think the reason why we see it as such a big risk is that it is a really large estimate that appears in the accounts, and as you'd probably guess, estimates are much more difficult to audit than where you've just got those firm transactions for us to audit. Similarly with the pensions liability, that's a significant risk for a very similar reason. Again, you've got experts in there, but again, it's that big estimate that forms a large part of your accounts. And then you move on to the COVID-19 pandemic, and again, Barry picked up on that it came late in the day, and there is lots of uncertainties around because of COVID. Obviously, it's changing the way we're working with your team, but also with things like because of the COVID, you've got to consider the impact on your assets, on the debtor position, and also the adequacy of any disclosures in the financial statements in relation to COVID. So again, the risk is there. And the final one, the significant risk that we've identified for the accounts is the purchase of the logistics house. And as I said, for the financial statements element of it, it's very much just understanding how you've accounted for it, and also how you've actually accounted for the income that's coming at the moment on that particular item. So that brings the accounts to the significant risks. The next element of it is just on other matters, and those are the things such as that we have to audit, such as your narrative report and the annual governance statement and such like. And what we have to do there, for example, is just making sure that those disclosures made in those reports are consistent with our knowledge and also consistent with other parts of the accounts. Barry picked up on materiality, and we have slightly reduced materiality this year, and that is to take into consideration, the tough financial situation for across the sector. And so we've sort of made the decision that we needed to reduce the materiality level a little bit just to reflect on that. Value for money, the two key elements there is the financial sustainability and the purchase of logistics house. So on the financial sustainability side of things, so it's a key issue that's impacting on many areas. And Old Chorley have done a lot of work over recent years to try and ensure that they've got a sound financial base. And we'll be just building on that work, looking at your medium-term financial plans, obviously the impacts of COVID on those medium-term financial plans, and also the main capital programs and the main capital schemes to make sure that they're delivering the income and the savings that we're expected. And on the logistics house, as I said, what we're going to be looking at there is that just sort of that robustness of the information that was provided to members to allow you to make that informed decision, and also just to make sure that those arrangements have minimised any risk to the council. So the audit logistics and team, as I said, we're looking now to probably try and start the audit in October and growing into November. But as Barry said, that might just impact on delivery of the 30th of November. And then the audit fees on the following slide. So basically, as you can see, there has been a gradual increase in the actual and proposed fees going forward. And now if you go on to the next page, which is audit fee variations further analysis, it gives you explanation on why the fee has increased from the original contract fee through to the the revised scale fee, which is to be approved by PSAA. So what we've said there is that when the original scale fee was agreed, that it basically the circumstances since then have moved on fairly dramatically. So, for example, we've got the raising of the bar by the FRC, increased scrutiny of our work, and also increased expectations on the work in relation to pensions and PPE. And we've got new significant risks in relation to COVID, and also the local risk of the logistics house work and the extra work that we need to do on that, which then leads into that fee of 44,316. And finally, I think the only final bit there was just to highlight again the independence. We talk about the non-audit services, but it's the standard non-audit service in relation to the certification of the housing benefit subsidy claim. So hopefully that you found that useful, and I'm more than happy to answer any questions.
Thanks, Simon. Thanks, Barry. Have anybody got any questions on anything? Tony?
Yeah. Normally, I don't like having an increase in your fees, but we're in extraordinary difficult times with the pandemic. That you've give a really good report. We're spending a lot of money, and it is important that we get a thorough, good audit to see that we've done, this council have done everything properly and financially sound. So thank you for your report. But it'll be a lot better when we can talk face to face and actually have a better kind of meeting than it is on the internet, because it's not the same really. I've not got the report. It mustn't have come through, or I missed it. So I've only been learning from what the auditors have been talking. But certainly it's a very worrying time, but thank goodness we've got a good auditor.
Okay, Chief Officer Gary Hall raised his hands. Are you there? You're on mute. You're on mute.
Mute.
Don't call him that,
you,
Tony.
I think you've gone a little over the top there, Councillor G, in your praise for the auditor, but anyway.
Right. He's the next auditor, by the way. Yeah.
I am, you're right. So, yeah, just a couple of things. Simon quite rightly highlighted the risks, particularly around some of the VFM work. I think it's fair to say that, the council's had a number of significant transactions over a number of years. So, again, it's not unusual for the auditor to look at how we've progressed those items and the information we've given to members. I'm reassured from the things that we've done previously that we've followed due process, but Simon and his team will be the judge of that. I just wanted to pick up the issue of the audit. and the deadline date. So, and the fact that actually we're pushing the audit right back to the receipt of the statements, there is the opportunity, of course, to start the audit and to start on some of the core statements. And I just wondered why that hadn't been considered.
I mean, I'm happy to pick that up, Gary. I mean, I think it has been considered. There is a problem whenever you basically start auditing before the actual final approved final set of statements have actually, the whole document has been brought together. Where we've worked in the past, it's just been very inefficient. So basically, and also we need a set of accounts which has been properly authorised by the Section 151 officer, really, before we start any detailed work. I don't know if Barry's got anything more to add on that.
Yeah, it's a fair question, Gary. We have done it in other authorities, and I'm afraid bitter experience has shown that it's not the most efficient approach. Sometimes figures change as a result of that, and that would lead to abortive work, which then leads to abortive costs that are borne by the council. So I think it's better that we wait until we've got the full set of accounts that we're then able to work on, and then we can just focus on making sure we've got those accounts in a final state.
Right, Gary?
Yeah, you won't be surprised to say that I don't agree with that, but anyway, it's not my call. It's down to the auditor.
Okay, James had his hand up. Are you there, James?
Yes, I am. Hello.
Good.
Hello. Yeah, just to say that in terms of the feed, it's not mentioned here, but the outcomes of the Redmond review have been published. Is it this week on Tuesday? And there's a number of different recommendations from that, or recommendations to government, and one of them is to review the pay structure for auditors. As Simon will tell you, I'd like to keep my auditors held to account, and it does seem that the way we negotiate with the pricing of the audit will be locally led, but there will be more options open to the market, really, in terms of how we do that going forward. The other thing that seemed to come out of it was the deadline for the draft statements might be pushed back to the 30th of September, for the final accounts to the 30th of September that it used to be, which might take the pressure off our auditors and ourselves as well, really. So it's worth looking at those recommendations from the Redmond review.
Okay, I've got no more hands up. No more questions?
Move that the report be noted.
Thank you. If that's all right with everybody. Yep, I guess so. I'll move on to item 6, internal audit plan progress Q1. It's pages 63 onwards. This is to receive and consider a report from the Director of Governance. So we're over to Chris this time. Are you there, Chris?
I am there. Thank you, Chair.
Good, good.
Yes, usually the report that would be presented would be an update as to the progress of the audit planning Q1. It's a slightly different format on this occasion, and I hope members have had a chance to read the report, which perhaps explains why. I won't bang on about COVID because everybody else has for the last 6 months, but it has an impact on the delivery of the audit plan by the internal audit team. But there are a number of other factors that are relevant for the consideration of this. So what I've done, instead of giving an update as to progress against plan, I've given you a progression of the annual governance statement action plan that was approved. So if you consider page 64, there were a number of themes and agreed improvements that were identified. And progress against those actions is contained within the report. There has been progress pretty much against all of them. The ones that perhaps are most outstanding are the ones that require consideration by other teams as well across the council. So in particular, the involvement of IT to support the introduction of the contract management process, but we're on with that. The second part that I want to take you to is at the bottom of page 65, top of page 66, starting with paragraph 9. As part of the action plan for audits this year, we are reviewing the capacity and the structure of the audit team. This is following Janice, the previous chief auditor, leaving the authority at the end of a contract, and another member of staff, Michelle Brennan, who was acting up into a principal audit role, also leaving the authority. So we've reviewed capacity, and we're also we've moved structure through the Shared Services Joint Committee, which has been approved, which will establish a service lead post to lead both audit and risk and take on the role of chief auditor, and establish a senior auditor role. And we're out to consultation on that at the moment. I'm confident that that will provide the necessary capacity to deliver the audit plan for both Chorley and South Ribble moving forward. But to be perfectly honest, we are a bit short at the moment on internal audit. We've got 2 members of staff working to deliver, and 1 interim member of staff who we appointed for a couple of months to help out with the delivery of the audit plan. What I would say about working Q1 though, and I promised not to mention COVID, it was almost impossible for the auditors to deliver audits in that period due to teams themselves not being present in the authority. It posed significant problems, so the team were actually seconded on to work directly in supporting residents through community hub based work. So it's not that the team have been idle, but they've been working to support residents in a slightly different way. The final item I just want to turn your attention to is Appendix A, and that's the internal audit plan for this year. The staffing issues in audit are a bit of a carryover from last year. So last year's audit plan was a little bit behind, but members will note there has been progress about the delivery of the outstanding audits from last year, and also commencement of audits in this year. I am optimistic about bringing a more detailed progress report to you at the next committee. So I'm happy to take any questions.
Okay, does anybody have any questions? I've got no hands up, so if everybody's happy with that.
I probably should, sorry, Chair, I probably should
Yep.
just mention, just to give members some comfort, although I was half expecting Councillor G to come in at this point and say it. Chorley Council do have quite a strong governance environment that we're currently working in, and whilst it's certainly not an ideal having a below strength internal audit team, it's not something that I think necessarily poses a significant risk to the council's governance arrangements and the monitoring. We do have quite a strong involvement at senior leadership team and so on, embedding the council's approach to governance and decision making. So I'm comfortable that this is a short-term situation. If it was a longer term, then you'd probably see me sweating a bit more on my camera.
Thanks, Chris. I still haven't got any hands up, so if we can move to note that report.
I'll move that we note the report.
Thanks, Tony. Okay, so item 7, RIPA application update. Monitoring officer will present this verbally. It's back over to Chris.
Thank you, Chair. There haven't been any RIPA applications received since the last Governance Committee. Just briefly to update though, because I will bring a report back when we receive the findings, but we have had a RIPA audit by the Information Commissioner's Office over the summer. This was a paper-based audit which was done a desktop exercise. There was no visit. The informal results have been received. There are no significant issues. The RIPA policy is, I think there were 2 things that were highlighted. The RIPA policy needs to be updated to reflect change in job descriptions, which largely have happened as a result of the shared services changes and other senior management restructures. And the second point that just needs to be picked up is around the council's use or the council CCTV facility that's in the police station. They just have, it was extended in the last 18 months or so, there was a greater provision and use of that facility, and they've asked us to revisit the protocol between us and the police on the use. So we're happy to pick that up. It arguably was something that sits more with the police than it does with us, because they are the primary users of the facility. But we're happy to pick up that recommendation and deliver it.
Okay. Does anybody have any questions for Chris? Again.
Well, I move the report.
Thank you. So we'll move to note that update report. Thanks, Chris. So over to item 8, which is the work programme. That's pages 75 to 76. So it's just to receive this, but has anybody got any comments or queries about it? Deafened by the quietness. No? Okay. So, go on. Who said?
No, so Chair, that it was Chris. It was just
hi.
to mention that this was something that the committee had asked for, just to get an idea as to what was coming up.
Yeah.
So I wouldn't necessarily expect there to be any comments
No,
on it, but it was just to give people an idea as to the agenda items likely to be received in the next cycle of meetings.
Okay, brilliant. So we note that report. I haven't had any urgent business given to me, and the next meeting's near to the end of November. It's the 25th of November. So thank you everybody for attending.
Right. Thank you. Goodbye.
Bye.
Thank you.
Thank you.
Thank you. Goodbye,
Thank you.
Chair. Goodbye, everyone.
Bye.
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 Goodbye.